Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the nitty-gritty of corporate America. And today I'm thrilled to bring you an in-depth look at Oppenheimer Holdings Inc., otherwise known as Oppie folks get ready, because this report is packed with numbers that tell a very interesting story of growth, risk, and resilience. Before we jump into the juicy details, make sure you are subscribed to Corporate Decoder if you love getting these unfiltered looks into companies, and jump over to our Discord link in the description below where we chat about all things corporate finance. Alright, so we are looking at Oppenheimer Holdings Inc., a pretty established player in the financial services world. They are an investment bank and a broker-dealer, and they have been around for a while, since the late 1800s. Essentially, they do a bit of everything financial services for clients, from helping companies go public to managing wealth for individuals and families. Now, what is interesting right off the bat is their stock structure. They have Class A non-voting common stock, which is what most of us would probably be trading, and then they have Class B voting common stock. The report mentions that most of the Class B stock is held by an entity controlled by their chairman, Mr. Albert Lowenthal. This means that even though Class A shareholders own a lot more shares, they have very little say in how the company is run. This is a pretty common setup in some companies, giving a lot of control to a founding family or a small group. Let's get straight to the financials. The company did quite well in 2025. Revenue jumped a solid 14.4% to over $1.6 billion. This growth was driven by almost every part of their business. Commissions were up over 13%, advisory fees a whopping 14.9%, and investment banking revenue saw a massive 51% spike. This last one is really impressive, showing they are landing more and bigger deals. However, not everything was sunshine. Bank deposit sweep income saw a significant 17.3% drop. This is mainly because interest rates went down and clients were holding less cash in those sweep accounts. Think of it like getting less interest on your savings account when the bank lowers its rates. Now, with all this revenue growth, you might expect expenses to be high, and they are. Compensation and related expenses jumped 8.5% to over $1 billion. This is understandable, as they reward their employees for good performance, but it is something to watch. The good news is that even with higher expenses, the company's profit before taxes more than doubled, from about $105 million in 2024 to over $211 million in 2025. That is a huge jump of almost 100%. Looking at their business segments, wealth management is their biggest piece, bringing in over $1 billion in revenue. This part of the business grew by 6.5%, and their profit before taxes was up nearly 10%. They are managing a record high of $943.3 billion in assets under administration, which is great because more assets mean more fees. Their assets under management, where they actively manage money, also hit a record high of $55.2 billion. The capital markets segment also had a stellar year. Revenue went up by 32.1% to nearly $600 million. What is really striking here is that they moved from a pre-tax loss of almost $40 million in 2024 to a healthy pre-tax profit of over $56 million in 2025. This shows a strong turnaround and improved performance in their investment banking and trading activities. Now, when we talk about how they value their assets, and these are things like securities and investments, the company uses different methods. Most of their assets are valued using clear market prices, which is good. That is what they call level 1, and level 1 means the price is easy to find and usually reliable. Some assets are valued using models, but still rely on market data, that is level 2. The trickiest part is level 3 assets, which use unobservable inputs, meaning they have to make more assumptions and judgments. As of the 31st of December 2025, they had about $20 million in these level 3 assets, primarily in things like auction rate securities and certain private equity investments. The key takeaway here is that while most of their holdings are valued transparently, a small portion requires more estimation, which can introduce uncertainty. Let's peek at their balance sheet as of the 31st of December 2025. Total assets grew to over $3.7 billion, which is a good sign of growth. On the liability side, they have about $2.7 billion in debts and obligations. This means they have more assets than liabilities, which is a good foundation. They also use repurchase agreements, which are essentially short-term loans using securities as collateral. They had about $1.2 billion in repurchase agreements and $175 million in reverse repurchase agreements. This is a common way for financial firms to fund their operations. When it comes to their employees, they have a few ways of compensating them. They offer restricted stock awards, which are shares of their stock given to employees that vest over time. For 2025, they expensed about $13 million for these awards. They also offer stock appreciation rights, or ORS, which are like cash bonuses tied to the stock performance. The expense for these was much higher at $19.2 million in 2025. These plans are a significant part of their compensation structure. Now, no financial report is complete without talking about legal matters. Oppenheimer is currently involved in a class action lawsuit regarding their Advantage Bank Deposit or ABD program. The plaintiff alleges they paid customers very low interest rates. The case is moving forward and a trial is scheduled for June 2026. The company believes the claims are baseless, but these types of lawsuits can be costly and time-consuming. They also settled a separate sex matter for $1.2 million related to municipal securities disclosure. Looking at the risks the company outlines, they are pretty standard for a financial firm. Market risk is a big one, meaning they are exposed to fluctuations in stock prices, interest rates, and global economic conditions. Credit risk is another, which is the chance that borrowers or counterparties may default on their obligations. Operational risk is also a major concern, including things like cyber attacks and system failures. They also highlight the risk associated with their dual stock structure, the Class B voting shares controlled by a small group, and the Class A non-voting shares. When you look at the company's overall direction, they are clearly focused on growing their wealth management and capital markets businesses. They are making strategic hires, expanding their offices, and even looking at acquisitions. They are also investing in technology to stay competitive. The numbers for 2025 do show significant improvement, especially in investment banking and trading, which is a very positive sign. However, there are always things to keep an eye on. The reliance on their controlling shareholder structure for Class B stock could be a point of contention for some investors. Also, the legal matters, while seemingly manageable, could escalate. The company is also facing competition from traditional players and newer fintech companies. Overall, Oppenheimer Holdings Inc. seems to be on a solid upward trajectory in 2025. Their revenue and profit growth are impressive, particularly in their capital markets segment, which turned around significantly. They are managing their risks and continue to invest in their business. The dual stock class structure is a point of note for investors to consider regarding governance. But based on these financials, they are navigating the current economic climate effectively and appear to be building on their strengths. Alright, that is our deep dive into Oppenheimer Holdings Inc. 410K filing. What do you think about their financial performance and their strategy for the future? Let me know in the comments below. If you found this analysis helpful, give this video a thumbs up and subscribe for more content like this. And seriously, check out our Discord server linked in the description. It is a great place to connect and discuss these filings. Thanks for watching, and we will see you in the next video.